Ladies and gentlemen, we are going to do something great here. Yeah, we are doing this question here. This is the question that we are doing here. This question here. Yes. So I hope you are able to see this question. It's very, very much applicable to financial management students, advanced financial management students, and the BDA students here. So I read it. Hadi Millers Limited is at an advanced stage of acquiring Baraka Wheat Growing Company Limited. The projected post-merger information for the next 5 years of Baraka Wheat Growing Company is provided below. So they've given us this information, ladies and gentlemen. I can see turnover is sales. I can see cost of sales. I can see gross profit. I can see operating expenses. And then we have, ladies and gentlemen, here, our profit before what year? Tax. Profit before tax. So if you're doing BDA, or if you're doing financial management or advanced financial management, I would want our working to start from here. I want you to put down there profit before taxes, and then of course you have the years. BDA students, of course, I believe you're using Excel. BDA students, I believe you're using Excel. You don't need to copy the entire table. I just want us to pick this from profit before taxes. Profit before taxes. Great. I want us to pick this from profit before taxes. Profit before taxes, are we there? Which question? It's advanced financial management, December 2025, question number 5B. But that question is applicable to intermediate students, advanced level AFM students, and the BDA. And are you able to hear Mwalimu, by the way? Are you able to hear Mwalimu, by the way? Are you able to hear Mwalimu? Great. Thank you so much. Great. So then if that is the case, I believe everybody, if you're writing this on your book, I believe everybody has been able to write this profit before taxes for each of those years, even those who are writing this in Excel. We are told, as a gentleman here, if you read this very well, we are told something very nice here. After the 5th year, cash flows available to Hadi Millers Limited from Baraka Wheat Growing Company will grow by 15% per annum to the infinite period. An amount of 125,000 will be retained annually by Baraka Wheat Growing Company for expansion. The cost of capital provided is 16% and the corporation tax rate is 30%. Determine the annual cash flows after considering the terminal values. Terminal values. How many marks are they giving us? They're giving us, ladies and gentlemen, 4 marks. 4 marks. They're giving us 4 marks. They're giving us 4 marks. Now, ladies and gentlemen, what we are doing here, see, already we have in this case here, this profit before who? Before taxes. We have that. We have this profit before taxes, my good students. So I can see I have here 720,000. Let me just write this on the whiteboard. 720,000. All right. Thank you so much, Kigo. Yeah, but now you need to specify for them that it is an AFM question. It's an AFM question because I know some of these ninjas will be going to their respective classes looking for that question. All right. So then I'll be able to write my profit before taxes. We have our years. So we have here 2026, 2027, 2028, 2029, 2030. And then we are copying, ladies and gentlemen, the profit before taxes. So profit before tax that we have here, it is 720,000. So we have 720,000. We have 900,000. We have 990,000. 990,000. We have 1051,200, 1051,200, and then 2030, we have 1094,400. We have 1094,400 like that. Now, ladies and gentlemen, immediately, this farm valuation. So immediately I get this profit before tax. My desire is to get profit after tax. So get ahead here and they give us taxes. Have they given us, in this case here, the tax rate? 30%. So now I expect you great ninjas to give me these answers pretty fast. I expect you ninjas to give me these answers pretty fast. So 30%, I'm being given a figure, 30%. The first one, in this particular case, they're giving me 200 what year? 16,000. So this is 216,000. Ya pili ni ngapi? 216,000. I can see the second one, which is 270,000, isn't it? 270,000. Do you have the third one? The third one. 297,000, right? 297,000. Then we have the fourth one. The fourth one. I'm so sure the Excel students are really enjoying because for them it's just one stroke. They have everything. They have everything. 315, 360, 315, 360. And then we have the very last one, which will give us what figure they are? 328, 320 like that. Thank you so much. I can also see the online students are rewriting great things there. So come and give us, in this case here, profit after who? Profit after tax. Profit after tax. Which is the same as the net income, isn't it? Net income, which is the same as net income. So the net income there, they're able to give me figures. So the first one is 5. The first one, I'm being given a figure of 504,000. 504,000. The second one, 630,000. Aha. Then we have, in this case here, the very third one. Thank you so much. So the very third one, ladies and gentlemen, the figure that I'm being given here, the third one, the online students, the figure they're giving me is 735,840. Allah, 619. 693. 693,000, right? Okay. 693,000. Thank you so much. 693,000. Thank you so much. The second last. 735,840. 735,840. And then now we have the very last one. My online students, they're giving me a figure of 766,080. 766,080. Now, ladies and gentlemen, we know at the end of the day, they want cash flows. So once I get profit after tax, how do I get cash flows? If there are any depreciations, you add them back, isn't it? If you get an examiner giving you depreciation, yeah, what are times he called where and who? Nowadays, to confuse students. You'll get financial management examiner calling these wear and tear. That is the same as what your depreciation. Or even if you are to get something like amortization, you know that is still non-monetary. So in this entire question, there is no depreciation. You're just doing this for our future, for our exam. We're just doing this for our exam, forthcoming exam, just in case there will be any. So in this case here, then we have what we call operational operational cash flows. So we have operational cash flow, the same figures, basically. Operational cash flows, the same figures. Now, ladies and gentlemen, having in this case here gotten these operational cash flows, you have to go to this part where they are talking about. We must go to this part where they are talking about. Look at note number 2. Note number 2, they are telling us that an amount of 125,000 will be retained annually by Baraka Wheat Growing Company for what year, somebody? Expansion. Out of these profits you've been able to generate, right? Out of these profits you've been able to, not profit, but cash flows you have been able to generate, there must be some retention for capex. So we have here capex or expansion. Capex retention. Capex retention. Capex is capital expenditure. Capex is capital expenditure. And this one is being retained every year. This one is being retained every year. And I can see a figure of 125,000 every year. I can see a figure of 125,000 every year. 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 So remember, we cannot, what we normally do is to get what we call free cash flows. We normally get what we call free cash flows for purposes of what here? Valuing any organization. For purposes of farm valuation, we normally work with what we call free cash flows. That cash flow that can even be now removed from a business for purposes of dividends. You see, don't tell me that even this capex, capital expenditure retention amount, it's not free. It is committed. It has to be left within the farm. It has to be left within the farm. As we want what we call free cash flows. As we want what we call free cash flows. As we want what we call free cash flows. So are you having the figures, ladies and gentlemen, here? Is there somebody who has these free cash flows? We am alone. So this is basically the cash flow which is available to the new investors. New investors who are known as Muvinho. So free cash flows. I'm getting these numbers from my great students here. They're giving me 379,000. Yeah, my brother, do you have the second one? 505,000. The third one. And remember, you are getting this free of charge class from RCM College, which I would want to take this opportunity to invite all of you to join us for block release. Join us for block revision. You can never go wrong working with us. There are students who are doing bid here with us today, who are in this class today. These are students that have been able to teach right from level 1, intermediate level. Some of them from 80. Now they are at the apex papers finishing. Yeah, so you cannot really go wrong with RCM. No. So 379,000, 545,000, 568,000. 568,000. Thank you very much. And then the next one will be what here, somebody? 610,840. 610,840. 610,840. And then lastly, what do we have there? 641. 641,080. Thank you so much, ladies and gentlemen. So those students who want to join us for block release, don't hesitate to call this number 0793 555 000. 0793 555 000. Now, ladies and gentlemen, having gotten these figures nicely like that, we must come and ask ourselves, this is a business. We don't expect the business to end in 2030. We don't expect a business to end in 2030 here. No. We don't expect this business here to end here. We expect there to be life after 2030. And that is now when they are bringing this concept of what? Infinity. That's why they are bringing this concept of infinity. They are bringing this concept of what here? Infinity. They are bringing this concept of infinity. So you see, we are being told in this very question, if you look at this very question very well, look at note number 1, additional information number 1. After the 5th year, cash flows available to Hazi Millers Limited from Baraka Wheat Growing Company will grow by 15% per annum to infinite what here, somebody? Infinite period. To infinite period. So this infinite period, you have to be very, very careful with it, my good students. Leave some space there, some like 2 or 3 lines, and then you come and talk about the infinite the infinite cash flow. So the infinite cash flow, at times your examiners call it what here, somebody, the terminal cash flow, one and the same. The terminal cash flow, one and the same. Terminal cash flow, infinite cash flow, one and the same. And anytime, ladies and gentlemen, you hear about this terminal or infinite cash flow, you shall always remember what we call the Gachagwa's model. Gachagua, you may not like him, but this guy is a force to reckon with. You may not be liking him, even me. I know this guy is quite divisive, but whatever he's doing is a very good opposition lead. You can see how he's able to oppose the government. You can see how deep he's able to get the veins of like Honorable Duale. Then the Honorable Duale was just releasing videos here. So whenever they talk about infinite, we should be able to know that this guy will still become relevant, whether he takes powers coming here or he doesn't take, he'll be able to get a good number of MP, he'll become relevant. So anytime they talk about infinite cash flow, we have in this case here the terminal cash flow, we shall always remember the Gachagwa's model wama dividend. Gachagwa's model, jamaa wama dividend. Dividends in this case here, which are doing what? Growing, isn't it? Remember, he was a DO. This guy was a DO who grew in ranks. He was a DO who grew in ranks. And since this gentleman was fired, this gentleman was fired, we know for sure we have in this case here a country without government. So in this case here, you divide by Kenya without what here? Without government. I don't do politics. I'm only putting this up for you to be able to do what you're supposed to remember this. Anytime they talk about infinite, anytime they talk about somebody whose career was terminated, terminal cash flows, always remember that concept of DO. And this DO is the current dividends. DO is the current dividends. DO is the current dividends. So in our case, it will be the current cash flow, the most current cash flow. And remember, not any cash flow, but the free cash flow. Are you able to see the most current cash flow, you great ninjas? 641, 641, 080, isn't it? 641, 080, 641, 080, 641, 080. All right. And then, ladies and gentlemen, we have in this case here G. G, we know that G stands for what here, somebody? Growth rate. G stands for growth rate. G stands for growth rate. So have they given me growth rate in this question? Have they given me growth rate in this question? What percentage? Oi, niko peke yangu. Aki wamesema namna hii kwa note number 1. Additional information number 1. After the 5th year, cash flows available to Hazi Limited from the Baraka Wheat Growing Company will grow by 15% per annum for what? Yes, somebody. So that is 15% growth rate. So I would want to get feedback from you. Are we together up to where Mwalimu is? Are we really together? Or is there somebody who is signing out because Mwalimu seems to be talking about Gachagua and you hate him? No, I'm only using this, ladies and gentlemen, just for purposes of what here as understanding. Otherwise, I know we don't belong to the same political camp. So talking about one individual throughout, I'm so sure. Now that I've been able to use Gachagua here, I'm very sure whether you like it or you hate him, you'll never forget this formula. Sini ukweli. This formula, you shall never forget it because unajua wama dividends. Yeah. Because of using this particular gentleman's name, you will never forget that. And that is my aim, really. And then we have, ladies and gentlemen, the KE. So the KE is cost of equity. Cost of equity, we only use this one for share valuation. For share valuation. For share valuation. Otherwise, ladies and gentlemen, in our case, because we are doing farm valuation, we're using cash flows, we shall always use WACC. So use WACC for farm valuation. For farm valuation. Like now what we are doing here today, we are having, ladies and gentlemen, an organization that we want to value, because you can see we have cash flows from an organization. These are not per se dividends, no. So therefore, the formula should change slightly to infinite cash flow infinite cash flow will be equal to the DO into 1 plus G all over W ACC minus who? Minus G. Because you're doing farm valuation, we have cash flows. If you're doing dividends alone, dividends are a component of equity. If you're valuing a dividend, we use KE down there. But if it's an organization, of course, this organization will be having both debt and equity. For organizational valuation, we normally use WACC. So, ladies and gentlemen, then I'll be able to come here and plug in. I'll be able to come here and plug in these figures here. So we have here 641,080 into 1 plus the growth rate, which is 0.15, all over the WACC. They never gave us WACC directly. Oh, even after they have given us, although they never mentioned it as a weighted average cost of capital, but not 3. They have given me cost of capital that I'll be able to use, which is point what here, somebody? I am alone, but I will overcome. I am alone, but I will overcome. So 0.16 minus 0.15. I can see the cost of capital given there is 0.16. So is there somebody who is able to give me this figure? Anybody who is able to give me this figure? Anybody who is able to give me this figure? Abracadabra. Abracadabra. Do we have anybody who can easily give us this figure? We. So I'm being given a figure of 73. I'm being given a figure of 73, 724, 200. 73, 724, 200. Thank you so very much. 73, 724, 724, 200, like that. Thank you so much. That is really wonderful. Ladies and gentlemen, after you do that, go ahead and read the question set to us by the examiner. Go ahead and read the question set to us by the examiner. So this examiner in Roman 1, they wanted us to determine the annual cash flows after considering the terminal what? Terminal values. Annual cash flows after considering the terminal cash flows. The terminal cash flow is the infinity cash flow. This is the terminal cash flow, this one. So then what I need to do, ladies and gentlemen, is to come here and give my examiner, these are the free cash flows. These are the free cash flows. So the free cash flows, I've got 2 ways of writing these. These free cash flows, actually, to be very, very nice, what I just need to do is to come and there. If I were you, I would come and copy this again. I would just go down there and copy this again. So there are 2 possibilities here. If I were you, this is what I would have done. If I were you, this is what I would have done. If I were you, of course, you can't rub the way I'm rubbing here, but if I were you, this is what I would have precisely done. Because I'm a good student, this is what precisely I would have done. This is what precisely I would have done. You can see in this case here, a hater of Gachagua was putting what here, an X across here. No, don't hate anybody. Love all these people equally. Love them equally. Even our president, love him. It's not easy to be a leader. That's why even the Bible tells us to pray for our leaders. Love all of them. It's not easy to be a leader. He never said you love them when you are in the same political party. No, pray for them. Pray for them. All of them. All of them. So then if I'm the one doing this, I'll be able to come and repeat these free cash flows. I'll write free cash flow. So we have here 2026, 2027, 2028, 2029, 2030, 2030, and then now I have infinity. So I'm just copying them again. This will be 379,000. This will be 505,000. This will be 568,000. This will be 610,840. This will be 641,080. And then the infinity cash flow. This one, I already have it. This one, I already have it. The infinity cash flow is the one that you ninjas have been able to give me. You gave me a figure of 73,724. 73,724, 200. That's what you gave me. That's option number one. Option number one. So this is option number one. Option number two. Option number two of writing this cash flow, which I also recommend, is to come and write them this way. You can still write them the way we have them here: 2026, 2027, 2028, 2029, 2030. In this case here, 2030, you just leave it like that. So write for us here the free cash flows. Free cash flows. The free cash flows, we have 379,000. We have 505,000. We have 568,000. We have 610,840. We have 641,080. And then you come and write here, terminal. Terminal means what here? End. You say terminal cash flow. So this terminal cash flow, put dash, 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 dash. And then at the end of year 2030, at the end of year 2030 is when you bring these 73, 724. And then you add up everything. You add up everything. So this will be 379,000. This will be 505,000. This will be 568,000. This will be 610,840. This one you have to add for me. That one you have to add for me. What are we able to get, my good students? That one you have to add for me. Yeah, repeat. Yeah, 743, 743, 743, 674, 365, 280. So you just choose one of the approaches. One of the approaches. You just choose one of the approaches. Yeah. So I would want to get some feedback from you guys. Number one, if you're doing BDA with me, doing this question in Excel, is there somebody who has been able to write up to where Mwalimu has reached? If you're doing BDA and you're using Excel, to write this, have you been able to write up to where Mwalimu has reached? Oh yeah, bracadabra. Maggie, my friend. Maggie never even called me. We shall overcome. It's only one student. Sony, at least Sony, great. Sony has been able to reach there. So it's only two students only. Power outage logged me out. So the two approaches already you can see they are on the board. Already they are on the board. Where we have in this case here, you write 2030 and then you write infinity. Ikiwa peke yake here. Or you simply come and write what 2026, 2030, and then introduce what you call the terminal cash flow, and then you book it in here. So these BDA students now, those are three. Those are three only. So does it mean now we discount the amounts? Yes. So does it mean, ladies and gentlemen, that the other students are copying down just like ourselves? Yeah, perhaps they could copy down on some booklet, and then later on they do the same question in Excel. However, I always prefer them. In this case here, Susan, thank you. But I would prefer you to always get an opportunity to use Excel later, right? Because I want you to get used to doing this in Excel, doing this in Excel. The other feedback that I would want to get, so far, are you guys enjoying this session, or am I, in this case here, doing the donkey's job? Are you enjoying the session here? Are you enjoying the session? Great. Thank you so much. Great. Thank you so much. Now from there, we shall discount. Let's discount. There is somebody who asked in this case here, when do we use WACC? When do we use KE? I'm 100% sure this student in financing decisions topic, they must have done valuation of an ordinary share, where we said, if you're valuing an ordinary share, you see an ordinary share, a share like this, there's no debt in a share. If you're valuing this ordinary share, we talk of DO into 1 plus G, all over cost of equity minus G. But if you're valuing an organization, a company, you can't use KE down here because a company has got both debt and equity. So for a company, then you'll be able to come and use what we call WOTR ACC. Once I do both of them, because I'll be doing these classes regularly, I want to believe that, ladies and gentlemen, all of you will be able to do what to understand this even better. And don't forget that this class, you're getting it from RCM College, and this is our number. I really would wish to train all of you. 0793 555 000. That's our number. Yeah, I'm looking forward to that particular situation where RCM now will be like a big, business school, university. And with, of course, your efforts, we shall be able to reach there. Yeah, so this is our number. Please get to join us today for block revision. Now, ladies and gentlemen, let's talk about discounting. Now we are talking about discounting because number two of this question, what do they want us to give them? Number two, they want us, ladies and gentlemen, with appropriate justification, advise Hazi Millers Limited the maximum amount to pay to acquire Baraka with growing company. How much should they pay for this farm? They should be able to pay an equivalent of the farm's value. So basically, we are doing farm valuation. And this farm valuation, basically, we look at the future. What cash flows are we expecting in the future? We discount them. So in this case here, we shall use what we call PVIF. Present value interest what year factor at what percentage? At the WACC at 16% at the cost of capital given. So abracadabra, are you able to read for me, my good students, this? My good students, are you able to read for me these PVIFs, present value interest factors for 16% from year one? From year number one, what figure do we have there? How I wish I had students who are able to move with speed, because I know some of us are stealing employers' time. Thank you, Antipas. I don't want you to steal too much time of your employer. I want you to go back to your workstations. So I want someone to go to the cost of capital tables, 0.8161. How about the second one, my brother? The second one is 0. What? Here, somebody, year 2 now. 7? 0.70? Some 74? 32, yeah. We go to the third year. The third year, how I wish some guys could be writing their third, fourth. I'm able to pick them very fast. The next one is 6407. 0.6407. And then the next one, oh yay, is 5523. 5523. And then we have for the year 2030, which will be year number 5, 47. 4761. So then what do you think shall we do for the infinity year? What do you think shall we do for the infinity year? What do you think shall we do for the infinity year? For the infinity year, ladies and gentlemen, we repeat. For the infinity year, we use the 5th year. Not PV Faladian, no. No, you drop down last year. I like that. Drop down last year. So in this case here, for the 5th year, we are using last year's figure. This is the figure you write there, 4761, like that. You repeat this. You repeat last year's figure. You repeat last year's figure. You repeat last year's figure. And if you do that, ladies and gentlemen, then are you able to give me the present values? Are you able to give me the present values, the discounted cash flows? Give me the discounted cash flows. So now you are multiplying, isn't it? Now you're multiplying. Discounted cash flows, I don't mind 2 decimal places. I don't mind 2 decimal places for speed purposes. I don't mind 2 decimal places. Yeah, what if we use option number 2? I'll be able to come to that, Ramla. I'll be able to come to that. I'll be able to come to that. I'll be able to come to that. So discounted cash flows we are multiplying 2 decimal places only will be sufficient for me this morning. What do we have here, ladies and gentlemen? Abracadabra. What do we have here, ladies and gentlemen? Abracadabra. Abracadabra. Oh yeah. Oh yeah. I'm not getting my guys talking now. I don't know what to do now. Because for 2026, I should take 379,000 times 0.8161. Yeah, we should take 379,000 times 0.8161. Which in this case here, somebody is able to give me 360, 326, 735. 326, 735.9. And then I have the second one. The second one, I've been given the third, 363, 917. Actually, I'll write whole numbers for my case. 363, 918. 363. For my case, I'll write just whole numbers for speed purposes. But of course, for your exam, you'll have to be forced to write 2 decimal places, right? The second one, I can't still yet pick it. I'm getting 375.32. That seems to be a very small number. 375.32, there must be a problem with that one. 316, 375, 316. Yeah, 316. Thank you so much. And then now we are talking of the fourth one, just a whole number for my case. Fourth one, just a whole number for my case. So for my case, the whole number here, 363, 918. Thank you so much. Now I'm on to my fourth figure. 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 Let me know what we have here. Let me know what we have here. 337, 367. 337, 367. And then now the fifth figure. The fifth figure. So fifth figure, I'm being given. Oh, first is wrong, huh? The first is wrong. Is that true? Or PVF is wrong? PVF is wrong, huh? It's supposed to be PVF. I'm told PVF is wrong. Sorry for that. I'm told PVF is wrong. Sorry for that. It's supposed to be 0 point. I'm told here it is supposed to be 0.8621. When you multiply, what are we supposed to be getting? Whole number. Whole number when we multiply. First one I'm told is wrong. 326, 7. Tosha hivyo. Ndaka just whole number. But for your exam, of course, you'll be able to do what you have to do even better. Yeah. So the first one, thanks, Ramla. Great. So the first one we've been able to correct, isn't it? How great. How about in this case here, year number 5? Year number 5, 641,080 times 0.47, 61. 641,080 times 0.4761, which will end up giving us what here? Mimi nasikia nimefanya kazi mzuri sana. Mimi napenda kazi yangu. Sijui kama nyinyi mnapenda kazi yenu the way vile mimi napenda kazi yangu. Yeah, unafaa pale unafanya kazi, penda kazi sana. Always feel nice whenever you get an opportunity to serve. Feel nice. Feel nice. So year number 5, I'm told, ladies and gentlemen, 305, 226. How about the last one? How about the very last one? The infinity year, you are taking this times this. The infinity year, you are taking that times that. The infinity year, you are taking that times 0.4761, which then will end up giving me what figure? I'm being told, ladies and gentlemen, this is 35,100,092. And therefore, farm value, you now come and add everything together. Now, please, somebody in this case here of good faith, of great faith, should be able to add for us everything there to give me the total discounted cash flow. To give me the total discounted cash flow, somebody should be able to add up everything now. Somebody should be able to add everything now to give me the total discounted cash flow, total discounted cash flow, to give me the total discounted, to give me the total discounted cash flow, which will be the same as a farm value. Who is that ninja? Which will be the same as farm value. Who is that ninja who is using Excel? Oh, Mary Luck is saying the first one is still wrong. The first one is still wrong. First one should be 326, 736. 326, 326. Oh, the one that I had here initially. But I thought you told me that Mwalimu, the PV here was wrong. I thought you told me that Mwalimu, PV at 16%. Because you see PV at 16%, you know the formula of PV, eh? It is 1 plus R raised to negative N. So it will be 1 plus 0.16 raised to negative 1. Are you able to confirm the PV for year number 1? Because that is what was wrong. The PV was wrong, but the total was okay. 0.8621. 0.8621. So this one here is 0.8621. Can you then confirm whether this is, my brother, just check again, 4 decimal places. Please give me the correct figure here that we should be able to use, all of us, really. Please correct. Let's not move with speed. Correct the discounted cash flow for year number 1. Let's correct the discounted cash flow for year number 1. Let's correct the discounted cash flow for year number 1. All of us, without feelings, let's correct 326, 736. So 326, 7. So is it 326, 736 if I work with that whole number? Whole number. So for a whole number, this is what I have here. It should be 326, 736. So all of us, are we in agreement that that is a correct figure? All of us, are we now in agreement that that is a correct figure? Yes, thank you very much. Then what is the farm value now? Now using the corrected figure, give me the farm value. Add up everything. Add up everything. Give me the farm value. Add up everything. Add up everything. Add up everything. Add up everything. So we are adding up everything, ladies and gentlemen, and we are able to get, in this case here, farm value of what year? They are telling me farm value is 36,808, 646. 36,808, 646 Kenya shillings. Farm value. Farm value is 36,808, like that. Kenya shillings. Kenya shillings. 36,808, 36,808, 646. That is the farm value. Now, a student called Ramla is asking here, what if in this case here we used number 2? What if we used number 2? What if we used this second model? Do you think we shall get different answers? No. The answer shall be the same. The answer shall be the same. So we have here method 2. So we have here PV. The answer for sure. The answer will be the same. For sure. For sure. For sure. Unfortunately, I rubbed my PV figures. The first one was what here, somebody? 16%, 0.80. Please give them to me very fast, PV figures. If you don't mind, just write them very fast. Sorry for that. The first one, no, it will not be 8621. So this is 8621. The second one, ladies and gentlemen, in this case, is supposed to be the second one, 7434. Great. 7432, sorry. 7432 here. And then the third one is 6407. 6407. The fourth one, 5523. 5523. The fifth one, 4761. 4761. So then you come and add everything here. Not add, but multiply. Multiply. We are multiplying everything. So please give me just whole numbers, only whole numbers. Discounted cash flows. The same. Like now the first one will be 326,736. This will be 375, 316. This will be 363, 918. This will be 337, 337, 367. And then now we have the last one, 74, 365, 280 times 0.47, 61. That will be slightly different. That will be slightly different. This one now will be slightly different. This one will be slightly different. The last one will be slightly different. According to Maritime, 35, 405, 310. And then we'll be surprised that the total value, total farm value will be the same. Total farm value will be the same. The total farm value will be the same. Regardless of the method you use, you shall be able to get this. Of course, we expect some little differences in terms of rounding off errors, but materiality should be able to get the same figure. Should be able to get the same figure. Ladies and gentlemen, I hope that is okay. 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 The final one, when you add everything, when we are adding everything, what are we able to get when we add everything? When we add everything, is there anybody who is able to tell us how much are we able to get? When we add everything, how much are we able to get? Yeah, according to some gentleman here, according to Ramla lady here, this is 36, 808, 647, which is exactly what we got using the other. We only got 646, and this is 647, which I believe is pretty much similar. Ladies and gentlemen, it has been indeed a pleasure hosting you this morning, and I believe you have gotten something. Now, this board, when I'm using this board, is it okay for us, in this case here, to be showing Mwalimu's face, or the students who are using the mobile phone? Mobile phone. I mean, let me just be very, very specific here. The students using mobile phone, is it better for you just to be seeing the screen, or you also want to see the teacher's face? We want to implement very good technologies. I think when you are seeing the screen alone, everything becomes very clear. Somebody is saying teacher's face. Of course, if you're using the laptop, then the two of them will be okay. But if you're using a mobile phone, screen alone, it becomes very, very good. Yeah, screen alone. Screen alone. And also for the internet. For the internet, when I put on my camera, students in this case here, yeah, for BDA students, of course, should we go the long way of PV? So discounting it is no. We just use the PV and the NPV functions. We use PV and the NPV functions. But again, Finny, there is nothing wrong in knowing how to also go the long way. Because I've seen students in this case here in the exam room getting confused with those PVs. And so when they know the other longer way, at times it can assist. Otherwise, thank you so much. I'm taking, of course, a break. I'm taking a break. most likely, I'm taking a break. I'm not doing part two because I'm mixing students. I have financial management students. Financial management students here. If I start, even the advanced, even the BPA, they're not doing part two. It will be quite sad for them. So I'm taking a break. I'll not be in today. I'll be coming back tomorrow at 6 p.m. I'll be coming back tomorrow at 6 p.m. So for my today's AMA class evening, I'll be having somebody standing in for me. Otherwise, for the daytime classes, Sasaband or whatever, I'm taking a break because I'm supposed to be picking my kids from school today. Niwapatie time kidogo leo na kesho mchana kidogo. From there, I tell them that I have other kids outside. And those other kids are my RCM students. So from there, then I'll be able to walk with you the whole. No. I'll not be there at 1 p.m. Paka kesho 6 p.m. Thank you so much. Be blessed. Continue making RCM a household name by bringing us so many students to come and revise with us. Thank you so much.